Hi guys, thanks for tuning in to another episode of Nuggets News. Today we've got a special guest, Blaize, who's from Trust Machines and Granite, some fantastic Bitcoin protocols, and we're going to be diving into everything that they're doing. So welcome to the show, mate.
Awesome. Excited to be here and dive into everything Bitcoin related. Thanks for having me on.
Yeah, it's amazing to see the Bitcoin price and market cap exploding, and now we've got to unlock all that wealth and turn it into DeFi and put it to use and that type of thing, which is exactly what you guys are doing. But do you want to give people a bit of your background and how you got into working in this space?
Oh yeah, happy to. I've been generally in crypto for the last, I think, 5 years at this point, and been solely focused in Bitcoin for a little over the last 2 years. My background is like I've been in the startup space for a dozen years. I started a neobank in the Middle East back in 2011, trying to build savings products. So I've been like strangely myopically focused on this concept of inflation and helping people save for over a decade, and that is what led me into Bitcoin eventually. So built this neobank, didn't end up working out, and then I was the head of product for a VC-backed real estate data analytics company. Did that for about 6 years, sold it, and then came into crypto full time in 2020. Like a lot of folks, I got suckered in or lured in, we're say, by the price action, um, and started a prop fund. Was doing some trading for other individuals, building tools on the side to like help traders like manage their accounts, and ultimately ended up joining Trust Machines about 2 years ago because I just got really tired of the trading side. It is just not my personality to be that plugged in, and I want to get back to building products.
Yeah.
So I joined Trust Machines. It's a product studio in Stacks, building Bitcoin related companies. I was in charge of their DeFi vertical, and so we have spent the last little over a year now building Granite, which is a unique take on Bitcoin collateralized stablecoin lending. So excited to dive into that with you and kind of explain where we are in the market and why we think that we add some value.
Yeah, so I guess with the Stacks upgrades, we've covered a lot of the stuff with Stacks and the other protocols in the ecosystem and that. So where do you see Granite fitting in? And do you want to maybe run through people at home that aren't familiar? What's the one-on-one on what it does and how to use it?
Yeah, totally. So I'll just start like with the problem that we were trying to solve, and it was a problem that I had myself. And then kind of validated and honed in on this over a lot of interviews with different people in the Bitcoin space who used lending protocols. And the problem is like when people want to take out loans against their Bitcoin, so you want to access some kind of liquidity without having to sell, um, it is very hard to do so without a lot of risk, incurring a lot of risk in some way. You incur risk through using various DeFi protocols based on their architecture and some of the architectural decisions that they've made. And you also really incur risk based on how liquidations are traditionally processed in DeFi, which is like essentially you have a point of collateral value at which, like, if you hit that liquidation point, you just get wiped out.
Yeah.
And liquidators can take 50 to 100% of your collateral on every protocol that exists today. And so that was just like not acceptable. I will say like I maybe was a little bit over levered in the last cycle and personally got wrecked. And so I wanted to build something where that would never happen again.
Yeah.
So that was the impetus behind building Granite. And so we've really focused on trying to make this the safest place you can borrow against your Bitcoin, trying to find every way in which users could get wrecked and minimizing or mitigating those risks. So a couple core areas that I'm sure we'll dive into. First off is like it's DeFi, it's not CeFi. So there's already like way more transparency and visibility. You can go read all the code. We wrote it on Stacks. So unlike Solidity, the actual code deployed on the blockchain is human readable. It's interpreted, not compiled. And so like you can actually just go read our smart contracts right now. You can jump into ChatGPT, ask them what it does. Like it's very
Yeah.
good at debugging things. But on top of that, so that's like table stakes. The two big things that our users are most interested in is we don't rehypothecate any collateral, which means that when you put Bitcoin into our protocol, it is never lent out. It never leaves the protocol. The only people who have access to it are you, the borrower, and a liquidator if you happen to enter into a point where like a liquidation is possible.
Yeah.
We, even as like the protocol designers, don't have any access to it. The contract that it's in is not upgradable. It's immutable. Like we can't touch it.
Yeah.
So that's one big thing. And that has actually kind of removed an entire swath of risk from that you find in a lot of DeFi. And then on the liquidation side, we're pioneering a concept we're calling soft liquidations. This concept was originally, I'd say, like invented, as far as I know, by Curve, which is a DEX in the Ethereum space.
Yeah.
And we're the first ones, I think, to do it in the lending space. And the idea is that there's still a liquidation point for a loan, but when you hit that liquidation point, you are only liquidated back to the position of solvency, so right above that point. So, if you're using most DeFi protocols, you hit your liquidation point, you're effectively wiped out. Like all your debt's gone, and somebody like will seize most of the collateral to pay that.
Yeah.
With us, if you're like 0.5% under, we liquidate you 0.5% back, and so it's this like very minor nudge back up, and it gives our users a lot more flexibility to withstand drawdowns or price wicks. So it makes it ended up being like a lot safer for folks to use Granite than other protocols for that reason.
Yeah, so for people at home, I've got some Bitcoin, and this is becoming really popular in Australia. I get a lot of people talking about how can I borrow, and the yields in the CeFi space are what 10 to 15% sort of thing on some of these loans.
Oh yeah, the interest rates are really high in the CeFi space.
Yeah, so if I'm using Granite, I've got my Bitcoin, I convert it to Stacks Bitcoin with a bridge, then I deposit it into Granite, then I can borrow stablecoins against it and use them how I want, or I can redeposit those stablecoins into the protocol to earn that yield, which is currently around 14-15%. Is that correct?
Yeah, exactly. And there are other ways in the ecosystem to earn yield. There's a great stablecoin. I mean, we're talking about. Well, sorry, not here. I'm doing that tomorrow. We are in the process of like integrating with a protocol called Hermetica to allow folks to earn yield using their stablecoin. You can also go LP into Bitflow and earn yield, like real yield from actually deploying your capital and the stablecoins there. But yes, that's the idea, is that you're either like deploying that for yield or you're taking it out into, like, let's say you bridge it back across Coinbase or some other like centralized exchange into real dollars, and you can just use that in the real world. So I think a lot of our users are actually using that liquidity for like real world purchases as well.
Yeah, we've had Jacob from Hermetica on as well. So
Amazing team.
Hermetica, Arcadeco, even on Botanics, we've got Palladium, like this explosion in Bitcoin-backed stablecoins. And we're very, very early on. It's kind of like when we're really early on in the ETH space and Maker was just starting to come out, and it's still a bit clunky and a bit hard to use and people familiarizing with the wallets. But I've got the same feel I had in that early Ethereum DeFi kind of summer.
Yeah, and you touched on something that's been actually an interesting conversation I've been watching on Twitter recently, which is the interest rates, because there are a whole swath of, let's call them custodial or CeFi Bitcoin lending products, and they all tend to have interest rates around, I think at a minimum it's like 11%, and they go up to maybe 14 or 15%, and then you go into DeFi and the interest rates are typically somewhere around like 4 to 5%. And the marketing that comes out of these CeFi companies is, well, the DeFi rates are volatile rates, and so they're going to spike up to 25%, and you never know what you're going to pay, and you're going to end up getting wrecked in the end. And like, it's not really truthful. In the end, like, yes, rates spike, like there are utilization spikes, but they tend to almost always correct like within an hour. Sometimes they'll be up for a week, but like on average, you're still getting a significantly lower rate if you just use a variable rate in DeFi than if you go into CeFi.
Yeah.
So if that's what folks are concerned about, it's almost always better to learn how to use DeFi and go that path.
Yeah, well, that was kind of my next question about what Bitcoiners and yourself see as that opportunity and that market cap now of Bitcoin getting into the trillions. Compare that to the multi-trillions and the lending in the banking space or whatever, but just that differential in the CeFi rate between, let's call it 5% and 15%, and that arbitrage that we're going to start to see, traders and investors and whatever, that's going to meet somewhere in the middle. And there will always be a difference with the other risks that come in and that sort of stuff. But yeah, do you want to just talk about how big that opportunity is that you see?
Oh, it's absolutely immense. Well, I mean, the first thing to think about is that if you look at the total market cap of Bitcoin, I think about 1% of all Bitcoin is currently used in DeFi. And that's WBTC and a little bit of CBBTC primarily. And so like, it really means that like Bitcoiners in general just are not either trusting of the DeFi space or like really understanding how to move their assets into it. So it's a little bit too complex. So even in that alone, there's like this huge opportunity to unlock just the latent Bitcoin, the 99% that's sitting on people's like savings accounts and corporation balance sheets, which is part of why we're prioritizing like simplicity and security. But I think the bigger, story that we're all kind of, I would say, confident is going to happen is the 10 to 20 to 30x of like the Bitcoin price over the next, let's call it 5 to 10 years. Yeah. Like what happens when this kind of, let's say for a lot of people, maybe like a moderate amount of capital becomes a really large amount of capital and they want to actually take liquidity against it. And it seems like more and more certain every day now that that's probably going to happen if you're watching the news cycle. And so it's like hard to comprehend how large that opportunity is going to become, especially as you see like public corporations also pulling Bitcoin on the balance sheet. They're going to need liquidity. They're going to have to find a way to get yield against it. Private corporations pulling Bitcoin on the balance sheet. A lot of like family offices starting to do that as well now. So it's becoming a pretty common inflation and debasement hedge.
One thing we've seen in recent months as well is that like institutions start to plug in more to Aave and it hasn't really been like a big mainstream talking point yet, but that's kind of where I think it's going to go for all the Bitcoin lending and Bitcoin DeFi as well. So you're going to have these TradFi companies that ultimately are not going to be able to compete or get replaced as the institutions work out, well, this is just a protocol that we can actually plug into, especially once it's battle tested and the TVLs grow and that sort of thing. So, I mean, are you having conversations and you know about those conversations, that institutional partnerships in the Bitcoin DeFi world, and how far away do you kind of think we are from that all becoming more of a reality?
Yeah, I mean, I think it's starting to happen. So I have heard about a number of institutions starting to use Aave. Interestingly, we've been having conversations on Granite about with institutions who have considered Aave but have rejected it for rehypothecation reasons, primarily because there are some potential tax complications with that. And if you're looking for a non-rehypothecating lending protocol, there really are only like two at this point. There's Morpho and there's Granite. I guess there's also Compound 3, but now that's using Morpho on the back end, so we're going to lump those together.
Yeah.
And when they compare those, obviously Morpho is way more battle tested at this point. We're a new protocol. They've been around for a couple of years at billions under management, but our liquidation parameters and process is so much more beneficial to these large borrowers. And of course, they're really concerned that there's going to be a price wick and they'll just get wiped out overnight while they're not looking. And so that's why they're coming and starting to talk to us about this.
Amazing. So, what other sort of upgrades and exciting things on the roadmap have you got next for growth and to expand that TVL and that type of thing?
Oh man, so we've got a ton of like what I'll call user acquisition experiments, projects, like MVPs we're putting out. Let's see, we're in the process of launching a leverage tool, so that'll probably be live in a couple of weeks. We are looking at several yield-oriented tools because that does seem to be one of the primary metas for a lot of like Bitcoiners right now. Even though we're not a yield-oriented protocol, like for us, safety trumps yield every time, but people seem to want access to that. And so we're trying to figure out how we can support that desire. And I think a large part of where our focus is going to be actually is continuing to try to make the liquidation process better and better for our users. Like our core thesis is that really is, for most Bitcoiners, the primary issue. It's like if you're holding a generational asset, something that like you plan on your grandchildren having, it's just catastrophically bad if you accidentally lose it. And so there are still a lot of optimizations that we can make to the liquidation process and our like margin notification system. We also proactively notify our users when they're approaching like a liquidation point to come in and recollateralize. So like we continue to like build on these areas primarily to like serve value to our users, and they're the least likely to get liquidated on Granite, and then if they are liquidated, it will be the least impactful of any protocol is the goal that we're going for.
And you're building all this on the Stacks architecture. Do you want to talk about why you chose Stacks compared to we've seen a lot of other Bitcoin layer 2s and other protocols plugging in directly to Bitcoin, that sort of thing. So what gives you confidence with to use Stacks and the Stacks code? Because this is one of the debates I've been having with a lot of other protocols about EVM compatibility versus Stacks doing it and having that Bitcoin security and the pros and cons of each. So how do you see all that?
Yeah, no, it's a really good question, and I think it's a constantly evolving landscape. So the answer that I had 6 months ago is not the same answer as today, and probably won't be the same answer 6 months from now. When we started building this, it was kind of like during that period when I think it was 75 Bitcoin L2s raised these massive funding rounds, and like everybody had plans to change the world. And now we're a year later, and very little has come of that. I think like I'm seeing maybe 3 or 4 go live, and it's excellent technology, but like the rest just kind of turned to dust. At that time, Stacks was live. It had a solid user base and like very clear plans as to how it was going to upgrade with Nakamoto and SBTC to actually become performant. So that was our initial choice, is that there were a bunch of white papers and one ecosystem that was actually live. So we're going to choose that one. Where we are today is I think that the EVM compatible ecosystems, that is a major benefit to them because there are a lot of developers who understand Ethereum and it's a more flexible programming language. There are downsides though as well. Like Clarity has certain advantages over Solidity in that it is it's not Turing complete. It's fully decidable. Like there are a lot fewer attack vectors in Clarity than you'd find elsewhere, and so it does make it more secure for like high stakes DeFi. You're never going to get a recency attack, which is the vast majority of attacks that happen on Ethereum. So that's like one big area like where Stacks is actually beneficial, and the other is frankly SBTC. It's like there are a number of Bitcoin wrappers, and you have to wrap Bitcoin in some way, pull it into these like smart contract ecosystems in order to use it. And in the diligence that we did, the SBTC wrapper was the most secure, the most decentralized, and the most, we'll say, adherent to the values of Bitcoiners, in being censorship resistant and permissionless. That may change in the future. Like there are a number of BitVM oriented bridges that are launching soon. You know, we have to see how well they work. They have to hit Lindy, like be running for a while before we really trust them. But like possibility that like there's a better BTC bridge in the future. But for today, SBTC is kind of the pinnacle, we think, of Bitcoin wrapped Bitcoin security at this point. So those are two big things for us on Stacks.
Yeah, and the regulatory clarity with Stacks as well, being the first SEC approved ICO, and now the US seems to be going pretty pro crypto and that type of thing. So, any other alpha you can give us, or things you've heard, or even just on your wish list for the Stacks roadmap? Because I know there's a lot of talk about how they're trying to get their foothold in Asia and really expand that SBTC cap. And then I think once you get that TVL to one of the top layer twos for all ecosystems, not just Bitcoin, then that sort of starts that snowball effect where people go, geez, what's this? And start to play around a bit more.
Yeah, let's see. Okay, so alpha. I'll say that the two probably big things that people aren't like thinking about. Well, the biggest one is CIP 31, which recently passed, which will just fundamentally change Stacks ecosystem and go to market for the project. And the context here is like almost every crypto L1 and L2 has this massive war chest and a foundation behind it, and they're just like throwing dollars at developers and like incentive programs to get people into the ecosystem. And Stacks never had that because it did this Reg A like SEC sanctioned, not sanctioned, SEC like okayed offering.
Yeah.
They could not have this big war chest or foundation that was actually leading the ecosystem. And so they've essentially been running with both arms and one leg tied behind their back this entire time.
Yeah.
And this will finally establish like a foundation that's able to give out grants and like raise capital for those grants. So I think it shouldn't be underestimated the impact that's going to have. It's like it will finally be competitive in terms of like developer incentives and structure with every other L1 and L2. Yeah. So that's a big one. And I think like the other thing that's been really interesting to watch is just the conversation around Bitcoin yield and how Stacks has done a very good job so far of like providing the sustainable yield on the Bitcoin that's been pegged in so far. And like I think there are really interesting plans to continue to do that and improve that in the future. So I'm excited to see where those go.
And I guess tying it all together, where do you see, Bitcoin going? And, most of the excitement is around how many sort of treasuries are probably coming online from everyone from countries to companies. And we're seeing it's just that interest from high net worth individuals in particular now that are seeing the way the world's going. And it's almost becoming a no-brainer to at least have 1% of your wealth in assets outside of the traditional system. So
yeah,
how do you see this all playing out maybe this cycle, or do you think we've matured? One of my theses is we've kind of matured now. We're not going to have 70% drawdowns on 4-year cycles, such as going to be pretty steady growth as there's less reasons to sell your Bitcoin because you can borrow against it and all that type of thing. So how do you just see the sort of bigger cycle for Bitcoin playing out now?
Oh, man. Well, I will say, shouldn't counter eggs before they've hatched, but it does feel like all these things that we've been saying as like crazy Bitcoiners over the years are actually coming true, which is pretty interesting and cool to watch. Yeah. Where does this cycle go? I think that like the phenomenon of Bitcoin treasury companies and of companies in general pulling Bitcoin in the treasury is creating a persistent bid that just did not exist in previous cycles. And you do see the US administration really starting to push Bitcoin. They think they just okayed it in 401ks and retirement accounts. The president's personal media company is the 6th largest holder of Bitcoin on the balance sheet in the world. So like it seems that there's a lot of push behind this from that administration. I think that we are seeing the institutionalization of the asset, and there will be a much more persistent bid. That being said, I don't think it's the end of like massive blow off tops and mania. Like that's kind of probably inherent in an asset that has completely limited supply and a lot of strong hodlers. And what that means is that there will be drawdowns as well. I don't think we'll have an 85% drawdown. That would be shocking to me. But probably we'll see 40 to 50% at some point. It'll be off a number that's a lot higher than we're at today. But I would be surprised if it didn't happen.
Yeah, I tend to agree. The only way I could see it pull back that deep is if we really do have the parabolic, blow off top compared to what we've been seeing is more stair step,
Yeah.
which is just really healthy. So, any
Yeah.
plans for Granite to have a token, or how do you see the need for protocols having tokens versus just the protocol itself and that type of thing?
Yeah. I think if you're operating a DeFi protocol, at least any US exposure whatsoever, it's required to have a token because you have to decentralize governance, and there has to be some kind of way to both track and enable that governance and incentivize governance. And so, like, it's kind of just table stakes that the token has to come at some point. Not quite sure when that would happen or what structure that would look like. I think we're getting a lot more regulatory clarity over the next couple of months, and they'll probably inform that kind of decision. We will be starting a points program, so read into that how you will. And that I think is supposed to launch in a couple of weeks, maybe like 3 or 4 weeks. So like that would be probably a stair step on the way there. But yeah, I would think that given the current regulatory environment, that there'd be a requirement to have a token at some point just to decentralize governance.
Fantastic. Anything else we haven't touched on today, Blaize, you think is important, or you want to share with people at home of your own thoughts about anything Bitcoin or DeFi related or crypto related?
Oh man, anything that's more? We haven't touched on. Let me think about this for a second. Um,
I think one of the things we're still missing to some degree is that more, developing countries' ability to still bank themselves and even mint tiny amounts of stable coins to have US dollar or some sort of Bitcoin stability in their wealth. Because it's all about the treasuries in these established nations with deep pockets. But I still see that opportunity for payments and holding Bitcoin and replacing the banking system in places that don't really even have a traditional banking system yet is something that's maybe fallen by the wayside. That's still a huge opportunity.
yeah, I feel like stablecoins are clearly going to be the first real world use case. And by that I mean, like, crypto can only grow so big, kind of being navel gazing and like looking only at itself. And at some point, we have to start pulling in real world capital and providing benefit to people who are not crypto natives.
Yeah.
And yeah, stablecoins baking the unbanked like is clearly a phenomenon that's going to push the US dollar like throughout the world and probably improve countless lives. It's interesting for me because like the first company that I started, this neobank back in Jordan years and years ago, was actually attempting to provide digital savings accounts for folks so they could access at local corner stores,
Yeah.
specifically to get them out of a cash-based economy. So it's fascinating to see that the whole 360 and like stable coins now doing that.
Yes.
And the flip side of that being that with the proliferation of US dollar-based stable coins, the ability of the US to continue to deficit spend and like create a lot of T-bills that they just push out on the world.
Yeah.
So we'll say like two sides to that coin. And that's a fascinating thing to watch.
Yeah, exactly. It's almost like we're going to have a CBDC centralized US dollar stablecoins, probably backed by treasuries. And then we're going to have these explosion of Bitcoin backed stablecoins backed by Bitcoin. And how that all plays out is going to be fascinating to watch.
Yeah, it really is. And like if we're going to have, and I think like, backed by treasuries doesn't necessarily mean CBDC, like, because that has a lot of Orwellian oversight and like surveillance built into it. But like there is definitely a difference between these algorithmic stablecoins, Hermetica being a great example, which would say is like a new generation of algo stablecoin. It's not, it's like actually backed by like perps positions and the like delta neutral hedging. It's much more legitimate than just like we'll say like the 2020 era of UST
Yeah.
backed by itself.
Yeah.
It'll be fascinating to see like if we have some of these algo stablecoins that start to come to like on par or replace the market cap of the more centralized ones. I'm also pretty intrigued to like watch the evolution of the Bitcoin L2 space, mostly because if we play out, I think what most people think is the future of Bitcoin being the price goes up, let's say 10, 20x. Hopefully there's a robust fee market. It becomes very expensive for people to use for even relatively small amounts of BTC. You're going to be spending a large percentage of your stack just like sending it to somebody else.
Yeah.
And so it seems almost required that we have Bitcoin L2s, Bitcoin wrappers, some way to take the coins off the main chain for the vast majority of people to interact with them. You wouldn't want to take a loan and pay $10,000 to initiate it just because like those are your transaction fees. So I'm quite bullish on the L2 space as a result of that, kind of as a necessary requirement just from the architecture of Bitcoin.
Yeah, and some of those L2s possibly paying Bitcoin miners fees to help the miners' income as the block reward drops. Like all these things are sort of longer term things that can help the Bitcoin stability and survival and all that type of thing.
Yeah, I mean, I believe in ecosystem. I think that like it's hard to know what the future holds. Like nobody foresaw runes, and then it just came to be. And so like we don't know where the miners are going to get
Yeah.
the actual fees. I'm confident that like there will be enough of a bid there. If this is truly becoming the reserve layer of the global monetary system, and if this is the primary treasury asset of companies globally, I don't think there's going to be a problem with those fees.
Yeah. Fantastic, guys. Well, I'll put all the links to follow Blaize and have a play around on Granite and earn those points starting in a few weeks' time. But any final thoughts for people at home, Blaize?
I would say keep fighting the good fight. It looks like we might be on the winning side here, guys.
Amazing.
So yes, and never spend your Bitcoin. There are better ways to get liquidity on it.
Fantastic advice. So, mate, I've really appreciated that chat. That's fascinating. I wish you guys all the best, and we'll definitely have to have you back on again in future for a catch up.
Excellent. Alex,
Cheers,
it's a pleasure.
Bye.
Talk soon.